Hello, this is Seewing Yee from the Yee Real Estate Network, and thank you all for attending this video presentation. So I'm going to really focus on teaching and educating and informing you of how to analyze our Cleveland, Ohio investments. Earlier this week, I have put out a introduction video on the Cleveland, Ohio market, and this is truly amazing. So, some of you already have already contacted my realtor consultant in Cleveland, Nick Warner, and many of you still have not able to take that next step. But I certainly understand on a historical basis, many of you are, for whatever reason, does not matter about economics, returns, whatever. You simply cannot do it, and I get that. It's a human nature. But for the remainder of you that are truly motivated, that have the money available, if you can analyze this Cleveland market, and you will clearly see from a logical and reasonable perspective, based on the indicators of economic and calculation returns on investment wise, is clearly, to me, in my opinion, is sort of no brainer. So, I'm going to go over the calculation aspect of it, which is extremely critical, as you know. But of course, I've taught you, I share with you videos, educational videos about how to calculate return on investments. And however, some of you perhaps missed that video that we put out from time to time, but I will educate you. So please pay attention, prioritize your time. If necessary, you need to watch my video, this particular video, more than once to digest it. So before I begin, clearly, Cleveland, Ohio is an amazing market. I mean, my partner, Nick Warner and Holton Wise Property Group in Cleveland, Ohio, and their in-house property management has been doing such a great job for many years for out-of-state investors. And whenever they promote any particular property, trust me, they have done all their due diligence. They have done all the work associated with bringing the property to my investors. So everything has been rehabbed. Some of the property already been pre-leased, and if not, they will be rented quite easily. And the property management is excellent, and they provide a great service. And so they pick the right property. They have done all the advanced due diligence and research on your behalf, and then the properties are all turnkey, ready to go. One of the highest returns ever, in my opinion. But before I go any further, I want to clearly share with you how to calculate return, which is so critical. So there are three metrics that you need to know to analyze any real estate investment property. The metrics are capitalization rate, cash on cash return, and total ROI. All right. So capitalization rate is the net operating income divided by the purchase price. Net operating income means your annual gross rent minus the annual taxes on the subject property, insurance, property management fee, and so forth. It does not calculate into the mortgage. All right. So whatever the amount is, and I'm going to go through the pro forma with you shortly. You'll get the numeric understanding. So therefore, I say it again. The net operating income is gross annual rent minus gross annual taxes, insurance, and property management fee equal net operating income and divided by purchase price. And so the benchmark for successful investment is, like 6 to 7% capitalization rate. That's the, industry benchmark, if you will. But as you will see, this Cleveland, Ohio market is just truly amazing. It'll be a double-digit cap rate. When you hear me saying double-digit capitalization rate for all future presentation, you know it's a very intriguing, very lucrative numerical investment. So the cap rate is double-digit, 10, 11, 12, 13, 14% capitalization rate. To me, is on a numerical basis, is a very high cash flow property, very good return. That's cap rate. And the cash on cash return is also a very important metric. Cash on cash return is the annual net monthly cash flow divided by the down payment, which is the another word for initial cash invested. All right. Again, if the cash on cash return is a double digit area, that means it's a very good investment. So it'll take you cash on cash return is basically tells you how many years it takes from your annual net cash flow on to recoup your down payment. If you can recoup the down payment, if the annual cash on cash return is 25%, that means in about 4 years you can recoup all your down payment you put into the purchase. That's your return on your risk or with the down payment. Does that make sense? So the benchmark for cash and cash return is around typically on an industry standard is around 7 to 9%. But in the Cleveland, Ohio market, I'm going to share with you the cash on cash return is now only exceed 10%. Oftentimes it exceeds 20 to 25%. It's based on your down payment. If you have the ability to do a mortgage, if the mortgage down payment is lower, that means your cash on cash return is higher. Okay, I'll get into that. And finally, a little bit later on, finally, the total return on investment, total ROI, which is the annual gross equity income divided by the essentially your down payment. What's the annual gross equity income? That means your annual net cash flow plus your annual tax savings plus your projected appreciation on a particular year equal to total return on investment could be 30, 40 to 50%. This is the ideal, right? So we can show you the total ROI on this Cleveland market property is truly amazing. So, okay, let's go through the okay, this kind of typical property, single family home in Cleveland, Ohio. They're fairly old, built 1940s, 1950s. That's how all the housings are in the Midwest. But as long as the house has been rehabbed properly, everything's turnkey, it's ready, it's rentable, and everything has been upgraded, the roof, the water heater, whatever, right? The expectation is this house is going to perform long term after you purchase here in the Cleveland, Ohio metro market, and then your maintenance and upkeep will be hopefully is at a minimal. That's the expectation when you're working with my market provider, Holton Wise Property Group. Okay, so let's go over the pro forma. I call it pro forma, which is first year performance projection. So very 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 critical, obviously. So just so you know, assuming you qualify for mortgage, right, to get a loan, there are different kind of loans, right? So for investment loans, do you know if you have less than 4 mortgages, and you could, believe it or not, you can obtain a investment loan at 15% down payment. And I'm going to show you the numbers. Yes, you have to pay anytime you put less than 20%, you have to put in a PMI, which is private mortgage insurance. But the properties are so inexpensive in the Cleveland market. The monthly PMI for putting less than 20% down is so minimal. With respect to your cash flow, that should be a no-brainer. You should do it. So again, for those of you have less than 4 mortgages, including your home mortgage or any other investment mortgages you have, you can qualify to put 15% down payment. So this is a typical Cleveland single-family home property we can promote to my members, investors moving forward. So this property, yeah, is about to be sold this week. I don't know, but it doesn't matter. We could have more properties on a weekly basis to show you, and this is the kind of number you're gonna see. All right, so that's all you need to know. So from a high level, I'm teaching you the investment opportunities that we have in Cleveland, Ohio market. So this home is a single family home, is ready to go, $67,500, 1,300 square foot. So if you want to, which I highly recommend, if you could do it, some of you look, most of my members are located in the Silicon Valley, San Jose. I cannot assume every single one of you have tons of money, which, a lot of you do, but some of you don't. And I spoke with you, some of you from time to time. Oh, Seewing, I don't have the money for the down payment to buy all cash purchase in Detroit, or I can't afford to qualify for $200,000 investment property in Texas, whatever. I understand that. So if your money is limited, if you have limited amount of money in the Cleveland market, if you put down 15% down payment, you'll be surprised you can get something like this. Now, for those of you, for the rest of you that have lots of money, lots of cash, a couple $100,000 to invest, and you want to do a mortgage, you want to leverage your mortgage to buy more property by putting less down payment as possible, by all means. If you have less than 4 mortgages, go for the 15% down payment. By the way, the standard procedure is if you have less than 4 mortgages, you can put 15 or 20% down payment. Or for 20% down payment, you do not need a PMI. But if you have more than 4 mortgages, and some of you have it, and have more than 4 mortgages total, and you have to put 25% down payment. So either way, in the Cleveland market, even though the price of the single family homes investments are so low, the great news is these properties appraises. What does that mean? That means you can get loans even on a low purchase price, such as in this case $67,500. Right now, you see the tremendous value associated with buying here in Cleveland market. Okay, let's go through the numbers. It'll boggle your mind. Okay, if you have, I don't know how to put it bluntly. When I get through with these numbers, if this does not intrigue you, if this does not motivate you and inspire you to buy multiple properties with such a minimal down payment and the returns are so high, I don't know what will. Okay? So at the end of the day, it's all up to you. I have given you all the necessary information, all the numbers, all the great return, great cash flow, great team that we're working with in Cleveland, Ohio, our provider. Oh, okay, here it is. So 15% down payment multiplied by 67,500 is a mere $10,125, maybe $1,000 of loan cost and maybe $2,000 closing cost. Your total out of pocket is a measly $13,125. Okay, this property has been pre-leased at a whopping almost $1,000 monthly. A renter has been renting for a few years already, so your annual cash flow is almost 12,000, which is mind-boggling. Here are the monthly tax expenses on the house: $39 monthly, insurance $83, property management fee at 10% of the rent, which is $100. So total monthly operating expenses $222. Annual, as you can see, here's a number. So at the end of the day, if you look it up here, look at the financial indicators, rent to value ratio, right? I also taught you the rent to value ratio should be at least 1%. That means 1% of the purchase price equals the gross rent. That's ideal benchmark. So when you buy $100,000 property, the rent to value ratio is 1%. That's the ideal benchmark. So your gross rent should be $1,000. But in this Cleveland market, the rent to value is way over 1%. It's 1.5% in this particular case. I say it again, the property I'm showing you, which is for sale this week, may be gone by the time you call me, which is fine. The future property we're going to promote here in Cleveland are very similar to the numbers you show here. So this is the benchmark educational video learning for all of you out there for future references. All right. So the capitalization rate, I already told you, the benchmark is 8 to 9% or 7%. 6%, but in this case, it's whopping 13.7% cap rate. All right, and the cash on cash return 39%. What does it mean? By putting such a low down payment, your annual cash flow is so high, right? So therefore, almost 12,000 annual net cash flow. What does it mean? This 39% means in about a little bit over 2 years from now, you will recoup all your down payment that you put in. See? Your down payment on is around 13,000. If you're getting almost 12,000, this is gross rent. I mean, we're talking about net cash flow. Okay, net cash flow is right here, right? Annual net cash flow, a little bit more than 5,000. So 5,000 annual it'll take you a little bit more than 2 years to recoup your 13,000, right? That's why it's this whopping 39% cash on cash return, which is mind boggling, right? And total return investment is 56%. So what does it mean? Which is really high. Once again, 56%. I already told you earlier on this video, the total ROI is determined by your annual operating income growth plus the savings on the taxes, right? Where is it at? Uh, yeah, which is right here. Okay, right? Your annual cash flow, net cash flow, plus the 2% first year appreciation, which is 1350, plus the principal reduction value that you get by paying down your loan, equal total uh, gross equity income of 7,350, right? Divided by your down payment of 13,125. So your total ROI is a whopping 56%. So there's three numbers you need to understand. Cap rate 13.7, which is way above the industry benchmark on a historical basis. Cash on cash return 39%, which is once again way below the benchmark of beyond the benchmark of 9 to 10%. But this is 3 times greater, and the total ROI 56%, multiple times greater than a other investment real estate investment properties. All right, so there you have it. All right, that is what I'm trying to tell you. Okay, so that's all I have to say. And if you're interested in pursuing our Cleveland market, please contact myself or my network consultant from Cleveland, Nick Warner. His information is at the bottom. So this property, as you might have guessed, go very very quickly. So because the demand for this kind of properties from all over the world, investors from all over the U.S., all over the foreign countries, they love this kind of properties. Many people buy all cash. So financing is available. 50% down payment, mind-boggling. 20% down payment you can do as well, and 25% down payment for anybody that have 4 mortgages. Okay, so hopefully this information will inspire you and motivate you to take action quickly, and so you can retire earlier, achieve your goals, whatever the case may be. All right, thank you so much. And I'm looking forward to working with all of my members to achieve your goals with buying the Cleveland, Ohio great high cash flow single family homes and multi units as well. Thank you so much. This is Seewing Yee for the Yee Network. Have a nice day. Goodbye.